So yeah, everyone, thanks for coming in today. We got an exciting Marcus Hour. This is, I believe, the 9th episode. And we have members from Strategic Claims Consultants, Jordan Mulbarger and Craig Kobel. And this should be a pretty informative session. It's dealing with issues that no community association is immune from, and that is disasters, insurance, condo insurance claims, all of that. And we'll get into the nitty gritty of it. We'll discuss it from a 10,000 foot view down to what you got to do with your specific policies that you have, and kind of how to navigate the claims process. So just to start out, my name's Jake Marcus. I'm here with Stephen Marcus, the co-host of the Marcus Hour, as well as our special guests, Jordan Mulbarger and Craig Kobel. And thanks, Jordan, for joining us today.
I think Craig is muted.
Yeah,
I am.
There you
go.
So all
Thanks
good.
for having us, Jake and Stephen, for sure. We're looking forward to the discussion today.
Yeah, this should be a good.
And the only comments I want to make is that Strategic Claims Consultants are a company that Jake started doing business with one of his, I believe, Miami clients, and I know that Jordan and Craig, I believe, are both from Tampa Bay, and the company headquarters is in Atlanta, but they have some interesting approaches in terms of dealings with insurance coverages and all that. And but I think the overriding reason why I think this will be of interest to people in New England is that Florida seems to be always ahead of the curve in good times and in bad. And with what we're seeing somewhat of, even though there are some great carriers and great adjusters for the carriers, is wrongful denial of claims in Florida, delays in claims, the problems that Citizens, the state-run Florida plan is having, and then ultimately even increases in premiums, but also cancellations and all that. But I think they can help us see the future in the Northeast and guide us through what they've seen and how they've dealt with claims down south. I believe they do work across the country, but they're particularly situated to know a whole lot about what's going on in Florida.
Yeah, and to that end, yeah, a lot of what we will see, and a company that Strategic Claims Consultants will generally be dealing with, is catastrophes of all sorts. And that's kind of why we want to, in this session, discuss what you can do before a catastrophe strikes, as far as insurance, as far as condo association preparedness plans for a catastrophe, and kind of bringing in a strategic claim consultants group to help with navigating, strategizing before and after the claim, filing the claim, bringing in the proper vendors or experts to assist with issues that arise from the type of claim you're dealing with, and then ultimately settling or resolving the issue, which that's where our experts, Jordan and Craig, will come in and kind of help with navigating that. And yeah, I mean, just disasters generally can vary from up in the Northeast, a winter storm. Florida hurricane is the most common I think that we come across. But you can also have pipe bursts, you could have blizzards, fire, tornadoes, hail, just general power outages. Even Jordan and Craig can also deal with construction defect issues and kind of navigating a policy from there. So it's it casts a wide net. And then once you get into the nitty gritty, it can kind of that's where the experts come in and help us out.
I'll add two things and then turn it over to Jordan and Craig. The two things are, Jake listed a lot of things that happened in the Northeast. One he didn't mention were ice dams. Ice dams have become much more regular. They resulted probably about 10 years ago with CAU insurance, and then other carriers are coming up with these per unit deductibles for water claims, partly because they were getting destroyed with thousands and thousands of claims from ice dams. The tiny pitches were very active in the Community Associations Institute in New England. The New England chapter has an office in Wellesley, Massachusetts. There are offices chapters down in Florida and in Atlanta. And CAI does sell a publication on, I'll mess up the name, but something like how to prepare for a disaster, which could be of help as well. With that all said, we've done a filibuster for 7 minutes. Let's turn it over to Jordan and Craig.
Yeah, thanks for the introduction, guys. I don't even know how to follow up with that. Thanks for the kind words. So I'll just dive in a brief overview about our firm and what we do, and then we'll dive into the nitty-gritty details of the insurance world. So Strategic Claims Consultants is a large loss insurance consulting firm, also known as Public Adjusters. We're a nationwide firm. We have offices in Atlanta. Craig and I are based in the Tampa, Florida area. We have Charlotte, New Orleans, New York. Our reach pretty much goes anywhere in the country. Craig and myself are usually always on an airplane or always traveling for work along with the rest of our staff. Our main goal is to always make sure the insured becomes identified and make sure that we can swiftly resolve a case without a claim going to legal, and just make sure that condo associations nationwide just return whole. And as we all know, every condo association has a different DNA, a different footprint that makes each situation unique, along with every claim you deal with. So every policy states you have to prove your loss. When you have a large loss, it's very important to make sure you document the claim correctly, you handle all aspects of communication on the claim correctly, and pretty much put any association in a position to succeed and kind of get through the tough times that we know as insurance claims. So the next slide here, what do we got?
Yeah, so yeah, we kind of just threw you into the fire there, but yeah, we're gonna do quick introductions for Jordan and Craig. Jordan's the national director of client partnerships at Strategic Claims Consultants, and as he kind of gave the overview, deals with things nationwide. Since meeting Jordan, I've seen he's been telling me he's flying out to Hawaii, out to Texas. He was up here in New England for a hurricane that actually just missed us, but he's always on the move and always developing, building up these clients and getting in the right spots where disasters are hitting, and to help out the policy holders and making the insureds whole. He's an FSU guy. I'm a U Miami guy. So his team's doing better this year than us, but at least you get lucky every now and then. So congrats to the Knowles, at least so far.
Did Craig have any experience playing football? I know Florida's a big
Steve, I was the best.
football state.
Yes, I was the best third string linebacker in the NFL that you guys have never heard of. So, and
But
with all your favorite teams, the Eagles, the Jets, Bucks. So you guys are huge fans of them.
yeah, the Jets seem to be 45 years of misery. And sadly, I'm too old, so I go back to when Joe Namath was doing those shaving cream commercials with Farrah Fawcett. And since then, not much. The Eagles have had a little more success and even beat us in Minnesota at a Super Bowl that old Jake was at. But we're friendly competitors, but we're never as afraid as when Jake and I were in Jacksonville. When would that have been? 2004 or so. With the game against the Eagles, and Jake told me that there were 30,000 people who drove down from Philadelphia, knowing that they didn't have tickets. And Jake was like 11 years old, and one of the fans in the NFL hotel bar hurled a football at Jake's head. Fortunately, I had some tough guys around me to protect him, but Craig, we forgive you. And we know Brian Hoyer because he used to be third string for the Patriots, and he ended up as quarterback after Garoppolo got hurt in the last game. But anyway, I digress. So you guys go on, Jake.
Yeah, no, absolutely. Craig, he is the president of large loss at Strategic Claims Consultants. And yeah, as we kind of went on a tangent there, Craig was played in a small league called the National Football League with the Jets, Eagles, and Bucks. Who Jets and Eagles actually played this weekend. Who were you? Did you have any rooting interest, Craig?
No, not anymore. I'm too old now at this point. None of these guys I played with, all the coaches for the most part have moved on. So, I'm trying to just adapt the local team, even though the Bucks make it hard at times, so that my sons can be fans of the home team.
They had a couple good years there with Tom Brady, so that's at least a nice nice Super Bowl there.
And the Jets did beat the Eagles, I believe, which sort of surprised me.
Yeah, that was definitely an upset. But yeah, Craig decided to take off the football helmet and has gotten into public adjusting. Initially started as an independent adjuster, and then kind of merged forces with Brandon Lewis, who is the CEO of Strategic Claims Consultants. And they have built a really big business model with Strategic Claims Consultants, and as we mentioned, nationwide reach, deals with every type of claim you could think of, a lot of expertise in insurance generally, as well as catastrophe preparedness and dealing with the catastrophe after it hits a condo association or a different business type of asset, any type of property damage basically they are dealing with. And as usually our Marcus hours go, feel free to type any questions into the chat feature, and we'll kind of just go on with the hour as it goes and try to get to your questions as they come up. But feel free to ask any questions, any comments that you may have about insurance. As we know, insurance has been a huge topic across the nation. And I mean, Florida is a big area where, as Stephen had mentioned, Citizens Property Insurance is the government-backed insurance entity, and a lot of policyholders have had to use Citizens because a lot of insurance carriers are, I guess, going under, or, you know, being downgraded. And there's just issues across the board as far as insurance premiums rising, insurance just becoming a huge issue from both the getting insurance, holding on to insurance, and then kind of the claims process as well. And yeah, disasters, that doesn't stop disasters from happening. Natural disasters, fires, what have you. That's the other kind of area that we'll get into, the area that Jordan and Craig have plenty of expertise in, and they'll be able to kind of give you kind of a best practices guide, and just some helpful tips and what we look for as we navigate the claims process, analysis of policies, and all that. So without further ado, let's get into the first topic, which is claims review and insurance policy analysis. And Jordan, do you kind of want to get into a little bit of this and what you kind of
Yeah.
And let me do my final interruption, and then I'll mute myself. I think Jake told me that there was going to be a surprise at the end of the Marcus Hour this week. So I'm guessing that there'll be cameos by Taylor Swift and Travis Kelce. Jordan, take it away.
Wow, it's hard to follow up with that. So, claims review and insurance policy analysis. I'm kind of gonna give an intro to Craig Kobel here. He's our president of large loss. He is SEC's CONDO claim leader. He's the one that kind of heads up operations and helps run the sales team and kind of make sure the ship's smooth sailing at all times. I'll kind of let him dive in on what we do on a basic policy analysis for our clients, and once a claim is filed, how we navigate the documentation from the carrier and to see how we can help an association.
Sure. Thanks, Jordan. So basically, there's nothing fun about talking about claims. Everybody's pretty upset with the current marketplace of insurance. Coverage is shrinking, premiums are skyrocketing, insurance companies are fleeing catastrophe areas, anywhere there's a major risk. And frankly, when we're talking about insurance companies, they're for-profit businesses, okay? So we don't judge insurance companies. We want healthy insurance companies. We want them to be there to pay claims when we need them, but they're making business decisions based on exposure. And frankly, every year, there are billions and billions and billions of dollars in storm claims and all the different perils that Jake just discussed. Storms have been getting worse. We've seen a more frequency in Category 4 and Category 5 hurricanes. Wildfires seem to be spurring up all across the country. What happened in Hawaii and California, and last year in Colorado. We just had a major hail event in Texas. Seems like we have a major hail event almost every month. There's all types of events. We've had deep freezes all across the country. So, the exposure for the insurance companies and the risk is increasing, and that's going to increase costs that are going to go to the consumers. So, you're also we're talking here, we're obviously public adjusters, we're experts in claims. You're also getting sophisticated consumers that are hiring professionals like us. One of the reasons we love condominiums, that we love property management groups and boards and things of that nature, is because they understand the value of professional representation. We're talking on the Marcus Hour who handle legal services. Your clients understand they don't want to handle their legal matters on their own. Our clients understand they don't want to deal with a major insurance claim on their own. They want to make sure that they're getting what they bought. Okay, we're not here to get something that nobody's entitled to. But frankly, most of the people that we're dealing with, condominiums, they have a full-time job, or they're retired and they don't want to deal with it. They want to hire a professional. And that's what we're here to do. The policies, you guys are attorneys, we can laugh about the attorneys on here right now. These policies are written so nobody understands them, so we spend a tremendous amount of time understanding the changes in policy language. Deductibles are getting higher. more exclusions are occurring, which means there's less coverage for events. You heard Stephen talk about some of these per unit deductibles. You know, it's just a continued evolution of increased cost on the consumer and less exposure for the insurance companies. And that's the sad reality. And some of that has to do with some abuses by different unscrupulous characters and contractors and things like that, or increased weather events. And that's kind of where we're at. So it's just important that you understand, number one, you're working with a reputable broker, an agent that's placing these insurance policies, understanding the atmosphere of difficulty that they have in placing these policies. And you want to get the most available coverage for the most reasonable price. You don't want to shop the cheapest premiums because you're going to regret it if something occurs. So having a reputable broker, an agent that you can work with is imperative. Taking a look at the coverages with them, working with, you know, your attorney at times to even provide additional safeguard there. And that's really what we're looking at when we're talking about getting a policy in place, and then also making sure that you have the proper coverages. Anything you wanted to add to that, Jordan or Jake?
No, that was well handled. We're going to talk more about the coverages aspects and more details about that in the preparedness plan section as well. So that was a good introduction to the claims review and insurance policy analysis.
Yeah, absolutely. And I think, Craig, you touched on a great point, making sure you have not only sufficient insurance, but the right insurance. And yeah, going to an insurance broker, making sure that you have a sound and, you know, make sure you know what you're getting in the master policy. Also encouraging unit owners to carry adequate insurance is another measure that we typically recommend, on top of having a good master policy at hand. So that's definitely a great lead in to, I believe our next is, just general condo association property claims. And this can come in the first party and third party context. First party is when you're going after your insurer directly, essentially. Third party is when you're going after another party, another entity, I should say, to get their insurer on board. And I'll go to Jordan on this one. What kind of things are you seeing just as far as general condo association property claims in both contexts, I would say?
And if I can interrupt again, there's a question that came up, and Jordan doesn't have to answer it right now, but should at some point during the webinar. And the question is, when there is an opportunity, can you speak to coverage for construction or developer-related defects? I assume that's rolled into the things that Jordan is going to speak about, but I just want him to know that that question has been asked by somebody in the audience.
Yep, we will get to that.
We got one more question about premium increases year over year. What are the standard deductibles for property policies?
The standard deductibles can range, Jake, you know, anywhere from, you know, $1,000 to $50,000 to $100,000. They could be percentage based on events. They're fluctuating, you know, and that also goes along with how your premium's calculated. So, you know, we're seeing all types of creative deductibles and all types of changes in set aggregate deductibles. So it's a crapshoot right now out there.
As with most things insurance right now, it seems.
Yep. So I'll give a brief introduction about the condo association property claims. I'll let Craig go into more detail. So Strategic is handling condo association property claims anywhere from Texas to North Carolina to Florida to the Northeast. We are a nationwide firm that see all different kinds of scenarios. We've been very heavily involved in the Hurricane Ian recoveries in Southwest Florida. So from Naples to Inglewood, Florida, Boca Grande area. That's 3 hours of drive time on I-75, which is one of the largest interstates in Florida, and when 3 hours of coastline damage is significant. Craig and I are still getting calls every day from different condo associations to help guide them and make sure they become indemnified. The main thing you have to realize when you deal with these big kind of claims is the insurance company is not going to just write a check because they think they owe you. You have to prove your loss in every single detail. Hiring a firm like Strategic Claims, you have to document every single square inch of damage at a property and work with your contractor to essentially make sure that the billing is correct, that it falls within the policy guidelines, and make sure you're abiding by the policy while making sure that the insured gets put back together wholly. And to do that, you have to combine the policy along with the damages and work with all the vendors associated to get these claims properly handled. I'll let Craig touch on kind of our success in these property claims, what sets us apart differently, and where we're maybe a couple of success stories on some big associations that we've worked with recently.
Sure. Thanks, Jordan. Well, Jake, I mean, what's going on out there, and I think a lot of your audience can understand, is how different the claims landscape is now than it was even 5 years ago, 10 years ago, 20 years ago. You know, like I said, we're fans of the insurance company, but the model's changed dramatically. The days of an insurance company adjuster coming out with a checkbook, you know, and negotiating with your contractor and writing you a check on site, those days are long gone. Those days don't exist anymore. It's a much more complicated process. It's a much more intricate process. And frankly, it leads to a lot more frustration. If you're reading articles across the country, you're seeing a loss of customer service in a lot of businesses, and that's translating into insurance claims as well. Now, frankly, it's increasing business for us, the lack of customer service from the insurance companies. It's also watering down their product. So what we're seeing out there in the field is if you have a big claim or a little claim even, you know, the insurance company could send out multiple different professionals to evaluate your claim. And what we're finding is you're getting this convoluted game of telephone that we all know about, and the message is getting lost. And that's leading to frustration with the consumer. That's leading to underpayments at times. And it's creating a sort of a lack of goodwill out there in the insurance claims process. I can tell you, I just walked out before getting on here from a board meeting with a potential client in Southwest Florida that has over $10 million claim from the hurricane. Let me remind you now, it's over a year after the hurricane. They have over a $10 million claim in damages, and the insurance company's paid them $3.1 million. Their construction has had to stop completely. Their building, we just went through rainy season here in Florida. Their building continued to get leaks from not being repaired properly, from not having funding. And there's a slew of items. I mean, a year later, they're still dealing with this. People forget that this hurricane occurred a year ago. And this is going on all over the place, as Jordan alluded to shortly ago. So you look for solutions here. I think natural progression, you know, you want to work with the insurance company. You want your contractor to put together repair methodologies. But I think at this stage, what we're seeing with condo associations is just the general need for professional representation, for education. I know, for instance, and I'm sure, Jake, you can appreciate this, and I know Steven's got more experience than all of us in all of our lifetimes. We love property managers. They're a big portion of our business, but I don't think any of us want to manage properties here. You know, we've got a full-time job and a specialty. I can tell you the property managers that we deal with don't want to be insurance adjusters. So it's just important in this claims process, and Jordan will talk about this a little bit later, is to make sure you have people that you can rely on and have a source to help you through the claims process. And it's just not something that you want to go out alone most of the time. So Jordan, anything you want to add to that?
No, that was pretty good overview. But yeah, I'll hit on the property management section. when you have a major catastrophe and you have a 7 or an 8-figure claim, having a property manager's job is not to handle an insurance claim, and the amount of time and hours and stress that can cause on them, it's really strenuous. And making sure that you have the right professionals in the right place at the right time to make sure that your association gets put back whole is paramount in this process.
Yeah,
Jake, do you get a lot of calls? Jake, I'm sorry, Jake, do you get
No,
a
go
lot
ahead.
of calls from frustrated property managers asking questions from the law firm about what they should do and things of that nature when it comes to claims often?
Oh, absolutely. It's definitely something that will come up. I mean, the manager of the association is yeah, that's the I guess professional on board to help with the management, maintenance, all that comes into an association. In a way, the liaison to the board members who, as you had discussed, is yeah, a board member are generally the individuals who represent the association in the association's best interest, and they have the fiduciary duty. But as far as hours in the day, yeah, they generally have a separate full-time job, and then this is a volunteer position that they have on the board. So yeah, working in tandem with the board members, property managers, and making sure we're bringing in the right experts, like someone at Strategic Claims Consultants who can navigate this process with the right expertise, knowing the right experts to get in. That's something that we definitely look for, and something that we're tasked with kind of dealing with and figuring out the most efficient and I guess in a way profitable manner of getting insurance claims dealt with, and also dealing with it at the front end of making sure we have the right insurance in place, and making sure that what we'll get to next is have a catastrophe preparedness plan in place.
Can I interrupt with two extremely good questions from the participants that from the attendees that I think everybody will want to hear. The first one is, how do you get paid? And I can say that it's a percentage. I can say in Massachusetts that it can't be over 10%, though Jake ran into an adjuster that they ended up not using because they were at some crazy amount, like 18 or 20% down in Florida. But what we generally find up here is 5 to 10%, but it depends on the claim, and I can't answer for Jordan or Craig, so defer to them. And the second question, which is an excellent question, is somebody says, we love using professionals. We love bringing in public adjusters. But do insurance carriers penalize us by charging higher premiums because we use public adjusters? My only comment is going to be that I haven't seen higher premiums to associations, because how would the carrier know if you use public adjusters? But I've seen at least one company that says that they do not want to deal with public adjusters, and maybe Jordan can address that issue, and if they've had any problem where an insurance carrier simply won't talk to them. So
Stephen, I'll take that. Yeah, I'll take that, Stephen. First of all, as far as what we charge, yes, we do a small contingency fee in most agreements, like you talked about. We typically customize those to make sure it works for both sides, both parties, but nothing up front, nothing out of pocket. Everybody gets to watch us work, feel comfortable with our process, and then when we reach an optimal claim settlement, then we get paid our fee. We invest heavily in our clients' claims also. If there's a need for outside engineers or things of that nature, we don't ask our clients to write checks. We bring in outside experts. We understand that there's usually a financial deficit for the board in a claim situation. So we make sure that they get a lot of those fees recovered in the insurance claims process. And then regarding carriers not wanting to talk to us, we don't experience that very often. I can tell you most of our people, including myself, worked for insurance companies. That's where we get the bulk of our employees, is from insurance companies. We want our people to understand the insurance claims process from the insurance company side. So we understand the etiquette, we understand the language, we understand the relationships. And that is incredibly key, just like in any business, is having relationships with the other side. They're going to be bad characters, just like there are bad attorneys and bad contractors and every type of actor you can imagine. So I'm certain that there's a lot of times that certain insurance companies don't want to deal with an attorney or a public adjuster or a contractor, but we don't run into that. And our people are trained, to work through any animosity and just prove the claim at the end of the day and be a professional and earn respect, just like in any etiquette situation. So we don't have that issue. As far as premiums increasing, there are a number of issues out there right now. That's not how risks are calculated and premiums are calculated, is if you use a public adjuster. Do you sometimes potentially hear that from an agent or broker that doesn't want to see a claim increase? Maybe. What we're seeing more frequently, though, Stephen, is that we're fighting on a legislative basis across the country is anti-public adjuster endorsements, where you can't hire a public adjuster in the policy. Fortunately, Texas just outlawed this. It was outlawed during Hurricane Ida in Louisiana for a time period. But that is something going on right now across the country that may come to New England if it hasn't already, where you don't even have the option to hire.
It hasn't, but that's right. So there's legislation saying that you can't use public adjusters?
The insurance companies are putting endorsements in their policies to say you can't hire public adjusters. And we're battling that on a state level.
Okay.
To say, that's obviously anti-consumer. And we've been pretty successful at the national level, different trade organizations. So we're working hard on that. It also doesn't make a lot of sense why insurance companies would rather be sued. I'm sure it's wonderful for the lawyers, Stephen. They'd rather be sued than have a professional public adjuster working on behalf of a consumer just to get them paid what they're entitled to. But yeah, we don't.
And frankly, I'm old school, real old school. But I sort of like when going back to when I started this doing condominium work like 40 something years ago. There was a person at Travelers in Boston, a guy by the name of Chester Suhu, and would have a claim. I'd call up Chester, and they weren't big claims at the time, but they seemed like they were. So maybe they're 5,000, 10,000. And after I had dealt with him a couple of times, he said, "Oh, just get the estimate, and I'll send you a check." That the relationship was built where he knew that I was being honest with him, and he treated us right in terms of resolving the claim, and our clients were very happy. Now, I know this question is going to be asked is, okay, if you charge 10% or 5% or whatever you charge, I think in Massachusetts, it can't be over 10%. Well, that means that we as an association are out of pocket on your $10 million claim. 10% is a lot of money. You're simply a cost, not a benefit. I think I know the answer to it, but I'd like to hear Craig explain it to the audience.
Sure. Well, I'll just give the example that I'm working with a couple minutes ago when I just was in front of a board of directors shortly ago. They're about $7 million short of where they need their construction to be. So they can be $7 million short and try to figure out some way to fund that shortfall, or they could pay us a small percentage to make sure they have everything they need to rebuild their property. and to make sure that that building is safe and put back together and up to local codes and things like that for the next 10, 20 years. On smaller claims, the insurance company understands, and I'll tell you straight from executives' mouths. Sometimes they're willing to pay a little bit more to consumers to make claims get closed. Okay. Claims just continue to get more expensive the longer they're open if you talk to insurance companies. So there's creative ways to make sure that everybody's whole and everything is fair and nobody has a financial deficit. You'll always be responsible for your deductible. And yes, our clients always pay us our fee, but we find that they feel very satisfied that they're entirely whole at the end of the process.
I'll give a small example, but one that is an easy way for me to explain why public adjusters make sense. One, we know we're dealing with volunteer boards. They may be brilliant business people, but it's not in the real estate business. The cost to do the repairs. But the tiny example that everybody can probably relate to, going again back to my early days of doing this kind of law, was somebody would have a water leak and the unit below would have a stain in the ceiling, let's say, of 2 square feet. The association and the managers might have settled for, okay, we'll give you 10 cents to stain kill those 2 feet. As soon as the adjusters got involved, whether it was ceilings or carpet, it would be the matching issue, which is the color fades over time. You can't just paint 2 square feet. You have to do the entire room or the entire unit. And just a small example of why, of how public adjusters are an asset, not a liability.
Yes, and one more thing just to add to that, Stephen, something interesting, just interesting for us, probably boring for most folks. In Florida, after the 04-05 hurricanes, it's interesting. The Florida Office of Regulation was looking at sort of discrediting the effect of public adjusters. They came out with something called the OPAGA report. And the OPAGA report was a government study basically on the effectiveness of public adjusters. And the intent was to show that they were taking away money from the public, that they were elongating claims. It actually ended up being one of our greatest sales tools. It showed that on an average claim, hurricane claim, on residential, public adjusters were increasing settlements by 747% on average. I want you just to think about that. So you'll be able to look that up, and I don't have the numbers on me specifically. It was either 757 or 47, but I mean, what a difference it was. And you're still seeing those types of differences now. The larger the claim gets, I wouldn't expect an 800% difference, but Jordan can give you a number of examples, and we have clients all over Southwest Florida from the hurricane where the insurance company offered them $1 million and we got them $10 million 4 months later. So it's a dramatic difference. And I just appreciate you mentioning some of your examples there, Stephen.
You're the experts, and but the questions keep pouring in on how much do you get paid. So can I give my thought on it? Because one of the questions is who pays, and then the second, which is sort of a trick question, but I'll explain why. And the second is, do you help the unit owners on their HO6 claims? So in Massachusetts and New England, typical these days, or not atypical, is a $50,000 per unit water damage deductible. So on who pays the adjuster, I know your agreement says that the association does. In Massachusetts, when you start breaking things up and allocating the deductible to the unit owners, and they get coverage A in the amount of $50,000. Some associations are charging a piece of the adjuster's fee to the units that sustain the damage, and the key ingredient to why that's not awful is what Craig just said, which is if you can get 50% more or 740% more, everybody is way ahead. But anyway, let me shut up and let you guys talk.
Yeah, we also got a good question, and it kind of leads into our next kind of discrete topic, which is catastrophe preparedness plans for a board and for an association. And that is, what should a board do when a loss takes place? And this is kind of there's a lot of best practices that you can take before and after. As we've discussed, having sufficient insurance, having the right insurance is one way. I would say after a loss takes place, kind of ascertaining the extent of the damages and really documenting the damages is probably another area. Is that what you would agree on, Jordan and Craig?
Yeah, I think that something that we would exhaust at length would be preparation before a loss. We spend an exorbitant amount of time as a company and money and resources educating people before losses. We've already talked about coverages, but really, frankly, having professionals, having vendors, I'll let Jordan touch more into that, but when there's a deep freeze, when there is a winter storm, having a restoration partner, a general contractor, water mitigation company, an HVAC company, plumber, having these types of professionals, having these relationships in place before the event. Because if there's a wide scale event that happens, those resources are going to be gobbled up quickly. Okay. And if you're not in the front of the line, if you don't have the relationships, if you don't have pre-loss agreements, you're going to be choosing from, for lack of a better term, carpetbaggers, people coming in. You don't know if they're there for good reasons or bad reasons to come in and help on these type of damage events. You hope most of these people are coming in to help, but there are bad actors that come in, and you don't want to be choosing from those types of people. You want to have relationships before the event. You want to make sure that your attorneys are reviewing these contracts. You're vetting these people. You've got the coverages in place. And really getting that plan in place of what happens if is usually the greatest start to a successful outcome. Another piece of advice, certainly, and you all can appreciate this, Jake and Stephen, is having a great relationship with a local bank and having a line of credit in the instance you need it. Because what's the biggest deficit when a major event happens? It's usually financial. And you want to make sure that you can put your building back, that you can make emergency repairs, that you can get occupancy back, that you can do all these different things. And what do you need to do that? Some boards, some properties are very healthy financially and the reserves are in place, and we know others are not. So making sure that that financial plan is in place is absolutely critical. And Jordan, go ahead. I'm sorry.
We've been very fortunate. I'm going to miss some, but we have banks such as South Shore Bank, Dan Peaker, and Howard Himmel at Avidia, and Rockland Trust and North Shore Bank, which will do Brookline Bank, which will do at least 10 to 12-year loans. Some of them will do, at least one of them will do 25-year loans if it has to be spread out long time. So that piece is good. Somebody asked, what do you do in addition to calling a public adjuster if there's a claim? So again, we're going to use a Boston example. A hot water heater bursts, the unit owner isn't home, it goes down 20 stories, does substantial damage to units in all 20 stories. In Massachusetts and in New England, we advocate insurance resolutions allocating the deductible to the unit owner and then telling the unit owner to get $50,000 of coverage A, or at least that. So what we do is the first step, if you have that policy in place, is notify the owners, tell them that it's since their unit, they should have the damage assessed as well as the insurance carrier looking at it and the adjuster looking at it, but that they should notify their HO6 carrier. The unit owner should notify their HO6 carrier, because the coverage A of $50,000, they might have a deductible of $500. But we find that the insurance carriers under coverage A are always picking up the deductible allocated in paying under the HO6 policy. So that's one step, in addition to calling a service master or a serve pro to come out and try to get the waters out, bringing in the dehumidifiers and everything else, because as we all know, unfortunately, if water sits for, let's say, 48 hours to 72 hours, then there are issues with mold, and then we get into all sorts of exclusions that carriers have as to mold damage. And typically, at least in Massachusetts, a property damage coverage of $15,000 per insurance year, and no liability or D&O coverage.
Yep. And that's a good point as well, to as Craig mentioned, basically the pre loss kind of planning. I think a few other things a board can do is, go after, or not go after, but encourage your unit owners to have HO6 policies in place and the proper policies in place to protect against their own unit's damages. Another thing a board can do is something we usually recommend is have subcommittees outside of the board. A disaster plan committee could be something that's in place that basically pinpoints and go and tells the association what to do, what the governing document should say. As far as disaster plan, conducting reserve studies to make sure that there's adequate finances in place, or as Craig mentioned, the proper lines of credits for loans. Steve had mentioned a few different, banks that we could go to kind of get into that detail, and really just kind of have everything in place beforehand, as Craig and Jordan would kind of probably say is the best thing to have in place, and then, document damages after, get the extent of damages through photos and videos, and go from there. But let's get more into the nitty gritty, just as catastrophe preparedness, and just continue going. Jordan, do you have anything else to kind of add?
I'll talk on catastrophe preparedness. So at SEC, one thing we like to kind of instill into our clients and our potential clients is playing offense, not defense. Having a proper catastrophe preparedness plan in case of the worst case scenario will put you in a position to succeed in one of the most stressful times in your entire life. After Hurricane Ian in Southwest Florida, there's two pretty big property management groups that I'm working with and have personal relationships now and kind of lead these accounts. And we have been developing these catastrophe preparedness plans with them in order for, in case if something like this ever happens again. So obviously the first thing every single condo association needs to know is, what does your policy actually say? Review your policy. What hurts you? What helps you? Do you have exclusions? What is your deductible? How are you going to navigate any kind of potential claim? Can it be from a pipe burst to a hurricane claim to a fire claim? they all have different language in the policy that applies to those each individual claims. So being able to know what scenario you're up against prior to a disaster situation will help you be put in that position to succeed. One way our firm acquires business is helping property management groups and associations nationwide provide them free policy reviews and guide them and help them and kind of help them develop a catastrophe plan where they know they're going to succeed if something bad happens. Also, another very vital part to developing a proper catastrophe plan is vendors. Like Craig was alluding to earlier, you do not want to have a large fire or a hurricane hit you and not know where you're going to turn and not know which vendor you are going to select or have potential vendors you're going to select. You always want to have choices. You always want to make educated decisions. We find all the time when condo associations go through these traumatic events that it can be very high level stress and they don't necessarily make the most informative decisions. And sometimes you have to just take a breath, relax, ask your resources around you. Ask Jake, ask Steven, ask Craig, ask the people that navigate condo complexes all across the country and know who to turn to. And Jake, if any of your associations ever need a guideline on how to develop these plans, we have templates for them. We have contractors, roofers, HVAC. We know the best players in every field across the country, and we can kind of help develop a plan working along with region specific. So it just depends on the area you're working and what type of claim you're going to usually be up against, and putting the worst case scenario onto paper and figuring out how you're going to overcome the worst situation possible. So
you brought up something really interesting that in the Northeast I don't think is all that common. If I heard you right, one, you know what most of the insurance policies out there say. I know the surplus lines where they could say anything, but you know the policies. But the thing that you said that in my experience, associations don't do, or managers don't do, or maybe they do, but I don't know about it, is to have a company such as Strategic in place, just like you have a lawyer and a CPA and a property manager, but before a claim. And it sounds like you mentioned, and correct me if I'm wrong, a couple of advantages. One, it sounds like there'd be no charge for sort of helping them develop a disaster plan unless you tell me otherwise. But more importantly, they have on their team Strategic as the public adjuster. So if a claim comes in, they already have retained somebody to deal with the claims. I think that's really interesting. I'm not sure how many associations
I can expand on that. Yeah, so we one of the ways Strategic retains business is through education and helping property management groups and associations develop these plans. I review policies all the time, send them back to associations, let them know what's hurting them, what's helping them, and also work with these property management groups to help their associations develop these plans before it happens. And educating and putting someone in the position to succeed before a disaster strikes or before a catastrophic event strikes will ultimately have them back on their feet and help everything get resolved. But then they'll also know who to turn to and who they can trust. We're the firm that makes sure from the very beginning until the last penny is paid. And when your renewal comes up, we look at your policy, and from every part of the claim, we're going to be there for you, make sure that we can be the person you turn to or the people you turn to. So
yeah, and I think Jordan, one thing to add there Jordan, that is how many claims we don't take, Stephen, that we freely advise on. You know, if it's a single unit pipe break or something of that nature, or a small smoky kitchen smoke out in a unit. I mean, we advise on those things freely all the time. The property manager may have a wonderful relationship, like you said, with the local service master group or ServPro or whatever mitigation company there may be. Not every claim needs a public adjuster. We all know that. But it is important to make sure that you're getting the policy interpretation, they understand their rights, and they have the access to somebody like us to ask the questions to make sure it is going right. Or more times than not, to not make mistakes and make sure you're in compliance with the policy. So we do that all the time for free. We field more phone calls like that than we do probably incoming claims. So it's important, again, that's why it's important to have these types of relationships in place.
And I assume that you would do Zoom calls, say with XYZ management company wants you to speak to, well, in our opinion, it would be to all of their property managers. You could try, and let's say they have 25 of them, you could have 25 different appointments. So what seems to make sense to me is you offer a Zoom call with the property managers of the property management company, telling them what you do, how you do it, and with the idea that hopefully it's you, but if it's not you, that at the very least they come out of it with one, knowing that they have to do a disaster preparedness plan, and that, as Craig said, he does, you guys do a lot up front for free, and two, that it wouldn't be a bad idea for them to have a company such as Strategic Inspections to be on board before the disaster happens.
Right. Absolutely, Stephen. We do a ton of continuing education, ton of Zooms, ton of presentations. You know, you're the sort of godfather over in CAI with all of your lifetime awards and and those things. We're always trying to get speaking engagements in those forums, and like you said, education, because it pays dividends over time.
So we're past 11 o'clock. Some people have dropped off, but a bunch are still on. If you all, Jordan or Craig, if you have things that you want to speak to, say for another 10 minutes, this time I'll really mean it. I won't say anything else. I know.
I was going to add one more thing before we kind of close up. This was our final substantive slide. It says what to do after a catastrophe strikes. Who you're going to call? Strategic claim consultants. But I think I would after our kind of discussion here, it's what to do before and after, during, whatever. You're going to always, the one thing you can do is call strategic claim consultants, but there's other preventative measures that can be taken outside of that, before and after. And that's kind of, I think the before part is what I really want to emphasize. It's not just after, it's before, what you can do before. As Craig, Jordan, Stephen had mentioned, there are a lot of things that you can do, a lot of hours that go into the planning and education that goes into that, from getting your insurance policy to getting in touch with the right broker, to realizing what you're kind of doing a study on your association, what they can pay, going to a lender, having a disaster plan in place, figuring out what you're going to need, what vendors, what experts you're going to need to rehabilitate your association, and then kind of just emergency actions you can take, and documenting all the damages with photos and videos.
And to show how low key Strategic is, under that last slide, if you can go back to it, they don't tell you where they're located, what their website is, what their email is, what their telephone number is. They're so late. I think it's a Florida people in the South thing. They're as Craig said, they're here to educate, and we want them to speak for another 10 minutes or so on whatever they want to speak to. But we're going to do a follow-up to this webinar where Jake's going to cut and paste all the questions that were asked, and we're going to provide answers, but we're also going to provide information on how to reach Jordan and Craig and Strategic. If you have unanswered questions, just feel like chatting to them. If you feel like talking about Craig's induction into the NFL Hall of Fame, and or anything else that might be on your mind, or if you want a public adjuster on your team before you have a disaster. So Craig and Jordan, do you have 10 minutes of just free forming thoughts?
Yeah, we got one more question just asked to us from Adrian. Craig, I'm going to read this to you real quick.
Okay.
With insurance carriers increasing premiums just for reporting claims, some of our associations hold off on reporting damages in condo units to their carriers until owners can prove the loss is greater than the association's deductible. Sometimes this takes some time, and by not reporting the claim right away, does this practice hurt the claim and potentially risk a claim not getting covered? What does your panel suggest as part of the association's risk management policy for associations to reduce the number of claims, especially for those losses that are less than their deductible?
Sure. Well, that was like 12 questions, but it's actually a great point, and I'm glad that she asked. First of all, it happens all the time, especially we're just talking about a normal loss there in this question, but what if you're dealing with a percentage deductible? Also, like in a hurricane situation or freeze situation, hail, whatever it may be. So I'll answer the question in two ways. I know most of the time the agents and brokers prefer to put the insurance carrier on notice. And that has something to do with the compliance in your policy. You do have a duty to report the loss as soon as you know it's available to be reported. Now, there are situations where you don't believe you're going to surpass your deductible. You don't want to make claim. You don't want to have a loss history to affect premiums. So yes, it's absolutely a loaded question, and it's going to be a case-by-case scenario. I personally completely understand that scenario. I don't want to make claim if we're not going to exceed the deductible. I don't want to have a loss history going against me. If I choose that I don't want that to affect future premium rates. So what I would make sure you have in place, again, is going back to if there is a water loss or something of that nature, you don't believe it's going to exceed the deductible, make sure you've got a reputable water mitigation company that's documenting the extent of damage, that's making sure you don't have any concealed damages within the wall cavities and things of that nature. That's going to end up be a bigger financial liability or all around liability down the road. You are going to have to act quickly to address the issue. You have to mitigate your loss. And then as you're going in, you've got reputable contractors, whether it be a GC or subs, that are giving you general pricing on what the reconstruction costs may be. But we all know we're talking about condo unit owners here. Some that aren't living there currently, some that are seasonal, some that are just a pain in the rear, right? And they don't want to comply and they don't want to help. So you've got to just do the best with the information you have. Your broker most of the time is going to want to report it. And if you don't have a loss that exceeds your deductible that pays out, it likely won't go against your loss history. So, you've got to just make the decision there. And if you've got the relationships with your mitigation vendor, you see it's a small loss, it can be taken care of, I wouldn't be reporting it personally if it were me. But your broker may want to have that on record to make sure that you have the availability. What I can tell you problematic part is if it does balloon, if the loss starts to increase and you did not report it timely and the insurance company did not get to investigate the claim, there could be a claim for prejudice against their investigation, timely reporting, and you could be violating areas of your policy duties in the event of loss. So, like I said, I'm talking out both sides of my mouth here because it's a case by case scenario. So I hope that answers your question as much as possible, because it's impossible to put it in just one scenario.
Yeah, and I think that that's a good point as to prejudice. I mean, you want to be acting pretty. I mean, most policies will say act promptly, or the word prompt is a key word. But then the other side is, but you don't want to prejudice yourself in the event of a claim by, I don't know, having damages done that are considered emergency damages. So I think that's a good point. It's definitely case by case. Depends on the damage that occurred, policy, and what have you. But you do want to, yeah, you want to be acting quickly as far as determining what the issue is, determining what to do, and all that.
There's also a spoliation issue, which is just a fancy legal and public adjuster word for basically doing the work before the insurance company adjuster gets to see what the damage was. And it's sort of like they can't just say, oh, tell us what happens and we'll believe that that was what the damage is. If you do all the repairs and then after report it to the insurance company and say, pay us, here's our bill from the contractor, they're probably going to laugh at you. I also want to add one more complication to a question at the end, which was all of our unit owners have HO3 policies. I assume the single family detached condominium units. The issue that I'm going to raise that's going to make that make you a little more nervous for the person who asked the question is, what if the unit, and this has happened, what if the unit burns to the ground and the unit owner does not have an HO3 policy? There's no ability to demolish, no insurance coverage from the master policy. There should be something in place in terms of it's going to be an eyesore. And the question is, you're going to say, well, it's a unit owner's problem. Well, it becomes this every owner's problem if the place looks like a disaster area. I think that might be beyond what Jordan and Craig have ever seen, but you can tell us if you have seen it.
I personally have not. I think a topic for another time will be what's happening in South Florida with everything the fallout with Surfside and developers absorbing some of these properties down there. But I have not seen that instance that you're referring to, Stephen.
I've seen it once, and it wasn't pretty. I think it sat like that for a couple of years, and I think it got resolved, but for the person who said they require each unit owner to have the HO3, and the association really doesn't cover the units at all. Talk to your master agent about what they suggest if the unit goes down. There'd be insurance carriers who would say to you, we don't want you tracking when each HO3 policy expires, because we think that puts a duty on you as the board to make sure that the unit owners all renew their policies. So it's a very interesting question. I have, like most things, I don't have a good answer to it, but something to talk to your agent about.
Great. Yeah, we also got a question on, might we presume that a disaster preparedness plan is done with input from local first responders and authorities? Should we ask our town for access to these plans? I mean, sometimes this could be an evacuation plan if there's like a hurricane or something, or measures in place for a freeze or what have you. I think, yeah, I mean, there's different ways to address might apply to your exact county, or town or what have you. But I would say it more depends on the structure of your association. What kind of because as we say with governing documents, each set of governing documents is going to vary. It's nice to have a template, but rules and regulations are gonna be different from even just, I mean, this is a prime example, Florida versus Massachusetts. Massachusetts might not be kind of susceptible to a hurricane. Florida won't be susceptible to a snowstorm or freezes. Although it's 60 there today, so apparently they might. But you know, it's gonna vary. It's gonna be case by case. I mean, sure, if the town has kind of a disaster plan in place, that may be a good kind of starting point. But I think it's going to vary depending on where you are.
I'm skeptical as to whether towns and counties provide those plans, but so I defer to Jordan and Craig as to whether you see that a board could simply, or the property manager could simply approach the town and say, gee, what do you suggest?
Yeah, I mean, local governments always have a plan in place for worst case scenario, especially in Florida with the hurricane environment. And you always have to have a plan of your own. As we know, like I said earlier, playing offense and not defense, and handling your own situation in your own hands and having the contacts you need to make sure that you're put in a position to succeed is going to put you in the best possible position. Yes, there's always resources from local governments to help you if a natural disaster strikes. But at the end of the day, you always want to make sure you have your best interests in mind and develop your own catastrophe plan in advance.
Definitely. So I think we've kind of gotten past well past the hour at this point. I think we should rename this the Marcus hour and a half, as that's usually how long these go, which is good. We're happy to provide the information. We're very thankful for Jordan and Craig taking their time this Tuesday morning to kind of address these very important issues. And we have the contact information here on the last slide. And yeah, we thank everyone for joining us as well. Anything else you guys want to add? Last kind of piece of advice or football fandom kind of gloating if you're an FSU fan, I guess.
Yeah, don't run the ball when you can take a knee, and go Knowles.
Oh my gosh. Oh no.
Yeah, I mean,
Thanks, and Jake, for having us. For sure, we know that claims aren't the most invigorating subject in the world, but for condominiums and your audience, these things are incredibly important. And the biggest regret we see is not having a plan. So I'm glad we got to talk about some of those items. Appreciate you guys having us on.
Yeah, thank you.
Our final question didn't seem to have a question mark at the end of it. It was Buckeyes all the way.
that's hey, they're playing pretty well. What are they? They're 3 right now,
Yeah.
just ahead of FSU.
Okay, I think Jordan has a tea time in about 5 minutes.
I'm just wearing a master shirt. I'm at the office today, but
He's already late, Stephen. He's already late for his tea time.
I think he's late for everything. I don't know.
that's not true.
Very laid back.
Very.
But we really appreciate having you on. Hopefully we can do this again now that you've gotten a look at our at least my rude interrupting style and going off on tangents because I'm old. But we can adjust for it and maybe do something where Jake can put me on mute as it's needed. But I hope that this was of value to the audience. As I said, we typically will take the questions that were unanswered or even answered, shoot you back an answer run by Jordan and Craig, and send that along with the PowerPoint to you sometime next week. But Jordan and Craig, thank you so much for being on today.
Thank you guys for everything.
Thanks, everyone.
Thank you.
All right.
Hey.
Hold on, I'm just saving the chat.
What?
Saving the chat. Oh, got another question. All righty. Thanks, everyone. End recording. There we go.